On this episode of the Stock Market Playbook, we've got Scott Alford of the Oraclum Capital hedge fund. This is a great episode. Typically, we like to go into people's investment strategies and styles and so on. Scott talks to us a little bit more about what it's like setting up, starting and operating a new hedge fund and growing it into something pretty big and pretty great. They've done an awesome job. This is a great story. I think you're going to love it. Enjoy. Take it away, Scott. Scott, thanks for joining us today on the podcast. Pretty happy to have you.
Thank you, Jared. It's a pleasure to be here.
So you and I have had a lot of chatting offline over the last few months about all things hedge fund. And that's why I thought this would be a good, can I even say great episode? Because a lot of the focus has been just having traders on here, just talking about investment strategy, how people approach the market and so on. And this episode, and you in particular, it's going to be a little bit different. We're going to talk more about how you guys set up your hedge fund, how that whole process went, some of the things about, raising capital and kind of the early days of a hedge fund. I think that's always such a compelling story. And for all of our listeners, you're part of Oraclum Capital, which we had Vuk on several episodes ago. I got a lot of great feedback from our episode with Vukovic. Am I saying his last name right?
Yeah, that's correct.
He was great, and you guys have a super interesting story. So I'm pretty excited to kind of dive into how this all started and kind of where you guys, where you guys went from day one to where you are now.
Yeah, absolutely. So we like to say that we are a hedge fund by accident, and we actually started in the political polling game. So my three partners each of them had studied at different universities, and one of the things, even though they were across different disciplines, one in economics, one in astrophysicists and computer scientists, all of them were interested in networks, and all of them were political junkies. So they were trying to figure out, how can we actually improve on polling? Because one of the challenges around polling, as you probably know, is sample size, right? Most people don't answer their landlines if they even have a landline. And then if you use online polling, it tends to skew very young, right? If you have landlines, it's an older crowd. If it's online, it tends to be a younger crowd. And it creates all kinds of issues in terms of sampling, balancing those samples. And Nate Silver did something really clever with 538, where he tried to rebalance, but he was still using the same kind of instrument of polling, which in many respects, especially in the modern era, is flawed. So they said, okay, what if we were to do, instead of polls, what if we were to try to build around forecasts and what we know around forecasts? So essentially they did a method that relied on two really key elements. One was a wisdom of crowds element, where in the case of politics, your friends might be Republicans, Democrats, Green Party, Libertarian, and you'd ask people, hey, who in a specific election do you think is going to win? And then you would ask people, okay, who do you think others in your network think is going to win? And what we see is this kind of self-correction effect, this wisdom of crowds, self-correction effect that allows people to say, hey, maybe I'm wrong. It gets people to pause and move from system one to system two thinking, if you've ever read Thinking Fast and Slow by Phil Tetlock. And the idea is move people from a reactionary to a more deliberate way of thinking about the world. So that's the wisdom of crowds approach. Then that second approach is a network analysis. Because one of the things that we recognize is we live in a polarized world, right? We live in our own bubbles, our own echo chambers. But it turns out people that think outside of their own bubbles and echo chambers tend to be much better at making predictions. It's true in politics. It's true in finance and markets. So what we want is to find a sample of people who are thinking broadly and are not just caught up in their own cognitive bubble, not participating in groupthink, but rather break through that and say, all right, let me reflect on what the other people around me think, and I'm going to thoughtfully respond and incorporate that in the kind of predictions that I make. So that's kind of how we got started.
And that's super interesting to apply that to the stock market, because now, and just to kind of remind everybody of our episode with Vuk and kind of your guys' approach, and I'll put it in a few words, give us a little more on this. But you guys essentially use this method to predict weekly markets in the S&P. You guys are doing real short-term kind of multi-day trades during the week in the S&P based on kind of these two approaches, right? You're taking essentially almost an internal prediction market model that you guys have developed and applying that to the stock market on weekly bets for your hedge fund. Is that correct?
That is correct. So what we did we originally built this on political forecasting and political polling. We've taken that same kind of methodology and applied it to financial markets. And the way that we do that, instead of asking people their opinions about elections and events and politics, we ask them their perspective on the market on a weekly basis. So we ask them about the S&P, the Dow, the NASDAQ, and a number of other indices, and use that as a way to understand sentiment thoughtfully. So if you've seen in the last few years the emergence of poly markets and Kalshi, there's all this interest in forecasting and making predictions. What we're essentially doing is taking that same kind of methodology, bringing it, as you said, internally, but using the latest behavioral science approaches to understand, can we better identify in something like a Kalshi or poly markets who's going to actually be the best at making and placing bets. And then we aggregate that information, and then we trade on it ourselves on the market.
Which is so interesting. I think I say this every episode now, but I love all the people I talk to, because I'm like, what? That's amazing. Where are people coming up with these ideas? And I think that's so cool. We've had several episodes about prediction markets and kind of the genesis of the prediction market. We've certainly never had anybody that says, we created our own, we trade on it, and we're profitable with it. I mean, that is so wild. So the approach is awesome. The methodology is awesome. It's very unconventional, which, as we know in the hedge fund world, unconventional is kind of the goal, right? But not just for the sake of being unconventional, but thinking of things that aren't being done is where the opportunity is. So that's super cool. Now, I have personally been through setting up two specific fund vehicles, right? Specifically, stock market, public equities, hedge fund vehicles, and it's, as you can probably attest to, like, not like super fun, but it's the necessary evil. We've got to set these entities up. We've got to get hedge funds up and rolling. It's a good bit of work. But I want to talk a little bit about, so you guys all came together and you had some ideas, you had some approaches and some ways you kind of wanted to do this. So what happened? You guys said, hey, let's do a hedge fund together.
Yeah. So my partners are all academics. I worked for a long time in both fundraising and philanthropy. When I worked in philanthropy, I worked in higher ed philanthropy. So I worked with academics. So we kind of did things backwards. And what I mean by that is we started by testing as many different methodologies as possible. A lot of people that want to start a fund, they start a fund and they figure out, okay, what strategies work. We kind of started with, okay, could a strategy work at all in terms of finding and predicting weekly markets? So
now let me interrupt here for 1 second. So you guys are doing this, but you guys are like, hey, we're all working our jobs, and kind of on the side, we're going to start talking about some of this stuff, start putting all these ideas together. Is that how it went? Or were you like, everybody clear the slates, we're going all in, we're going for the war room every day, we're going to figure this thing out?
Okay, so Vuk, Mile, and Dan, those are my three partners. Vuk, Mile, and Dan, all together were building this in private markets. So they had done everything in elections, but they also had worked with some private companies in Europe. They had done some testing and modeling the spread of COVID. They had other projects where they had applied this same methodology successfully in different ways. The challenge was doing this as a series of one-off projects is very difficult to scale, right? Because a lot of people want to understand maybe. So for example, let's take an example, right? No names, but let's say there's a company that wants to move into a new market. They're trying to understand pain points and understand what's going to happen, but they're trying to aggregate different information that's really hard to aggregate. One of the things that network analysis allows us to do is identify where problems may be able to be sourced from, or maybe where you're trying to find super connectors or influencers that can make a really big difference in terms of getting a foothold in a new marketplace. So those are the kinds of projects that they were working on. And then it was a matter of, hey, this is not scalable in the way that we want it to scale. And I had been in conversations with Vuk ever since I had met him back when he was at Oxford pursuing his PhD and looking at elite networks back then. But we had stayed in touch, and I said, if you ever decide to go into financial markets, let's have a conversation. And that's kind of how the team came together. The three of them were working together. Vuk and I had known each other for a long time. And when he started testing on financial markets, taking 20,000 of his own capital and going north of 50 and doing it very publicly, where he was posting on X and LinkedIn and letting everybody know, hey, these are the trades that we made. This is the market directions that we predicted. So from there, it was a matter of, what do we want to spin this up into? It could have been an ETF. It could have been a fund. It could have been, there were a lot of different ways that we could have figured out how to build this as a project. We decided the way that made the most sense was a hedge fund.
Just go the hedge fund route. That's smart. So you guys say, okay, we're setting up a fund. You go through all the fun, and we don't have to get too into like the steps of setting up a fund. Hire an attorney, pay a decent amount of money, and just buckle up, right? So you get a fund set up, and now you guys are like, okay, we've got this fund. Maybe everybody's put in a little bit of money, like the partners, right? And now you have a process, you have an approach. It's time to raise money. What were the next steps once you got this fund, the paperwork done? You guys are ready to roll.
So let me actually first start with terms, because I think that's one of the things that's really important when you're approaching the marketplace and saying, hey, we have a deal for you. What's actually going to work? And one of the things that was really important when we started the experiment was transparency, right? We let people know, hey, this is where we predict the market is going to go. This is where you can't do that when you're a fund, right? You can no longer just put out, hey, this is where we think the market is going to go, because then people can trade on your signal, right, in a very public way. So we're no longer doing that. But the other thing was we were trading weekly markets, which means that the instruments we were trading were highly liquid. So one of the discussions was, and very important was, if we make it really liquid, it makes it easy for people to move in and out of the fund, which makes it a little bit harder to raise. On the other hand, that fits with our philosophy of, if we get returns for people, they're going to stay, they're going to stick around. And so when we went to market, that's one of the things that I think made it a little bit easier for us in going to market, is that a lot of people, we built trust based on both showing, hey, we've been transparent all the way through this project. And if you are not happy with the results, you have an escape hatch. You have a way out. But if you build that trust with us and are in this for the long haul, we think we're going to build something really special.
That reminds me a little bit of the story. PayPal, kind of early on, when there was these, the online payment situation was pretty new, and PayPal said, we're going to make it so easy for people to take their money out of PayPal as well as put it into PayPal. And everyone said, oh, if it's too easy to take their money out, nobody's going to keep their money in PayPal. And they said, we disagree. We think that it'll actually make people more comfortable leaving their money in. And as it turned out, they were right. And I think the hedge fund world, the investment world, the more locked up things are and the more locked in people are, I think the worse it is, right? It's, with my fund, we say, you want to take money out every single month? Go ahead. There's no lockup. We have to abide by our fund administrators' accounting rules, which we can't really go too much more than about every 30 days for our current setup. But, a lot of funds say, hey, you're locked up for a year, 2 years, 3 years, 5 years. Private equity certainly is like that. And that's, I think people want to know that their money's available. It's not that, they're going to pull it out just because it is. And so I think accessibility to funds is actually like a really, really good focus. So that's cool that you guys did that.
And I think it needs to, just like what you were saying with your fund, it needs to align, right? It needs to align with your own liquidity as well, because so much of the mindset of, hey, we've got to lock things up to make sure that the business is stable. But if you're not getting returns for your investors, if you're not investing in your own business, your business isn't going to be around for very long. So we
For
wanted to
sure.
build that kind of trust from the very beginning. And it's also allowed for us to get other clients who, let's say, they might say, hey, we're only going to invest in a year, but we are going to put this in the fund for a year and move this on to our next project, right? Somebody, let's say somebody who's in real estate, or somebody who is moving things between like different, it could be blockchain technology, it could be whatever technology it would be, but it allows people to get a high performing investment, build trust. And most of the time what they do is they put a certain amount of money with us, add and take away, but they never actually leave the fund, right? So
Yeah.
it's a win-win
I
for us and for them.
Yeah, I think, I'm currently listening. I don't know why it's taking me so long to get through it, but I went back to the episode of the Founders Podcast. I don't know if you listen to this one, but Founders Podcast is great. And I went back like a year, and I'm listening to Jeff Bezos, kind of his, there's like a recap of all of his annual shareholder letters, from the beginning till now. And he was so focused on, listen, if we just make our customers happy, everything else will kind of work itself out, right? Amazon was all about, let's just keep our people happy by doing the best we can for them, and then the details work out. And so it sounds like you guys have a bit of that approach, right? Let's make some good relationships, and things are gonna be in our favor in that way, instead of, we're going to hold on to your money and you're never going to get it back, and all of that. So that's great. Now, so you guys kind of figure out the image you want to have, the principles you want to have in the fund. You have your approach down, and now onto the track. Now remind me, when was all of this? You guys, when was the fund formed? How long have you guys been official?
Yeah, so we started testing in 21 and 22 and launched in the beginning of 23. So we launched February of 23.
So you guys are a little over 3 years into the launch, post launch, and how's it been so far? Everyone having a good time?
I mean, it's been great. It's been a great journey so far. That's the thing. You learn a ton along the way. I mean, I'm sure you've seen this operating your own fund. And to anybody out there who does want to launch their own fund, you're going to learn so much through this process, right? Everything from regulatory and compliance to capital raising. There's so much about this world that you're really not going to exhaust. And I'm talking about everything from trading strategies to the way that the industry operates, the complexities of relationships, and who you want to build and how you want to build, because there's so many opportunities, right? So like we started with, for example, let's just take with capital raising. We started with a lot of high net worth individuals, but the thing that they say is, okay, you raise from high net worth individuals, the next thing you're going to hit is family offices, right? Our next investors were actually, that we did have a couple family offices, but we actually started with some small institutions and funds of funds. It all depends on the kind of offering that you have. It might be attractive to different people. So there's not an exact formula of this is the way to raise capital. But I will say philosophically, the thing that is distinctive is it's all about relationships. It's all about understanding your customer, understanding what they're looking for, the time horizon of the kinds of investments they're trying to make, the risk profile of the investments they're trying to make, and then consistently trying to find ways to provide value. Because I think so often in this industry, people are like, if they can't figure out immediately, is this person going to invest, they walk away. And I was like, that is not the way to approach things. I think that the way to approach things, it's to listen, figure out how you can add value. And that's why I have contacts in venture capital and private equity and real estate and crypto. And you just start going down the list. Doesn't mean that we're always aligned in terms of the instruments that we trade or the investors, but it does mean you listen to people, you engage, you find ways to partner. And when I do run across somebody who I find and say, hey, that's not a fit for us, but guess what? I actually know somebody who that could be a great fit for. It builds a lot of credibility for you and your brand. And I think even more than that, it makes the industry better because you're connecting
For sure.
good people together. And the pie is not fixed, right? I think the whole idea behind free markets is that the pie is not fixed. We can grow the pie together. And that's kind of the philosophy that we operate under.
I think there's two things that stand out to me to that. First of all, those are not just words. I've watched you do this. You know, from the moment I met you, you said, "Who are you? What's your name? Let's stay in contact." And you scheduled calls and you introduced me to people, and I've introduced you to people, and it's been a very open networking kind of situation. And needless to say, I haven't come across tons of people that do that, or too many at all, right? And it is a much needed thing. So I think that's so important to remember, is that, like, you know, you're actually doing what you're saying, and you're networking, you're sharing, you're open, you know, and I think you come to mind for a lot of people when they're like, who's somebody I could hook this fund up with that doesn't fit me, right? Or who could I get some, you know, some sounding board, some advice, something off of? And so I think that's really great. And the other thing I would say with that is, you know, like you said, you guys started with high net worth individuals, right? And for anybody that's like, well, what's a high net worth individual? Somebody with a lot of money. So you guys start with individuals that are saying, hey, I'll put in 250, 500, maybe $1 million, right? And then you kind of move up the ladder there. And I think it's super interesting, like you said, you know, everybody, I mean, obviously, a goal is to get like a big institution in that's like, here's $50 million, here's $100 million. But what's more important is you have to identify what you're a good fit for and what somebody else is a good fit for, right? There are going to be funds out there that really their best fit is just high net worth individuals. And then there's funds out there that, you know, maybe have a larger capital load, you know, tie up money for longer periods of time. And so an institution's going to be better. And you can't just base it on who can I get the most money out of, right? It's got to be based on how does this work best for everybody? And then you go that direction. So that's, I think, crucial to, you know, that fundraising side of things. And it sounds like you guys are doing that. Now, how has kind of this fundraising, talking to people, networking side of it, how has it changed from today to when you guys launched about 3 years ago?
So when we launched, a lot of the conversations were being very frank with people and saying, hey, we don't know what we're doing, which is kind of a counterintuitive way to run a business, of saying, hey, we're coming from outside of this world. We have so much to learn. Like, I would love to learn from you, love to hear your insights. And there were so many people in the very beginning of the journey who came along and coached. And this was a conversation that happened not too long ago, because our 3-year anniversary, the magic 3-year track record, was in February. And I sent notes to a number of those people that I spoke with. And it was completely genuine, of so many of those people along the way, even before the fund launched, but also through that, the first 6 months, year, who like sat down and coached with us and said, here are the conferences to go to. Here are the ways to partner with people. Here's how family offices really operate, right? Here is how to work with RIAs or funds of funds, or, hey, I know somebody who might be interested in this, and made introductions. Like, people, so many people in this industry are incredibly generous. And I think we were very fortunate that a lot of the relationships that we had early on were people who were very generous. And I very much appreciate your kind words at of those 2 points of, I do try to live out that generosity, but a lot of that is also giving back what other people modeled, right? When I meet somebody, I met a couple people at iConnections who said, I don't have a fund yet. And I was like, let's sit down, let's talk through it. Let me make introductions for you. Because I was in those shoes not even 3 years ago. And I remember the challenges that existed, but even a few small pieces of advice that people gave were transformative for the way that we approached some of these things. So in many respects, we crowdsource information for our signal, but we also crowdsourced professionals from the industry, from the best of the best, to launch the fund.
Which is such a great approach. I mean, you guys apply your trading strategy to fundraising as well. Like how interesting, how great. But also, I think another like super important fact that you brought up, which is when you go into the financial world like this, certainly if you don't have like a pretty long, healthy background of it, it's a little intimidating, right? People are throwing numbers around at you. They're asking questions, or they're talking about things that are very much not in the everyday vernacular, I would say. And it's a little intimidating. I think it's okay to remember, like, I don't know this stuff yet. I'm learning it. Here's what we're doing. Does it sound interesting? What can we learn from each other? Like, I mean, it's okay to not know, right? And I think, we've certainly felt pressure from some of these big funds that, have very specific requests. And it's like, I find myself always thinking, okay, this may not be a good fit. I want everybody to be a good fit, but it just may not be a good fit. There's some that just need the certain technicals and the certain situations that you might not know, you might not be doing, you might not be familiar with, and that's okay. There is plenty out there, and there's plenty of people that you can find that will be more in line with what you're doing. So it's okay. I mean, we've all heard it a million times since we were kids, right? If you don't know, just say so. And I think that very much applies in the hedge fund world.
And I think you often see the standard that I see in the hedge fund world, even for small funds, is this fake it till you make it approach. And what I have found is that when you do a fake it till you make it approach, you end up in a community of people who are also faking it till they make it, right? And what you actually want when you talk to allocators are allocators who are going to be really forthright and honest with you, because that's how good quality relationships are built. You don't build a marriage or a dating relationship on fake it till you make it. You build it on authentic communication, listening to one another, working through problems. When you see, hey, these are the kinds of boundaries that I want to set. These are the kinds of terms that I want in the kinds of partnerships that I have. And it's not obsessed with the terms per se. It's about preserving the relationship itself. And I think that's exactly the anecdote, or the antidote, excuse me, that is needed for much of the industry. Is not, hey, fake it, be mysterious. I mean, in some respects, like don't give away your secret sauce. But I think there's a fine line between not giving away the secret sauce and being very forthright with people of, this is what I do know and what I'm excited about, what I'm seeing, and these are the gaps in my own knowledge. Can you help me think about this differently, address this in a different way? Or even better, kind of this who not how approach of, who is the right person to talk to help me think about this differently?
Yeah, for sure. And I think if you look at it from the long-term perspective, like, who do I ultimately want to be acquainted with? Who do I want to, have in my network and so on? I think that changes that approach very much. Like you said, instead of just got to get money in, because you do got to get money in, but we want to be in this for the long haul, not just, hey, we got a bunch of investors, they, it wasn't a good fit, everyone's gone, and now we're, back to where we were a year ago, kind of a thing. So it's worth really being very methodical about that approach and how you pursue that. So that's super great. So what is next for Oraclum? You guys have been at it for a little over 3 years. You've raised a significant amount of capital. You've had some good returns. Just keep growing, keep building. Where do you guys go from here?
So I think it's a couple of things. One, and you probably know this, right? As somebody who's run funds, as you get into past that 100 million AUM mark, you have to do your RIA registration with the SEC. And I know that's like, ooh, what's the TLDR, the short form is, it means that you need to up the ante, which means that all your internal processes, they need to be tight from the beginning, but they need to be perfect, or as close to perfect as you can get them by the time the SEC is looking at your books, right? And I think That's one of the major drivers. So the internal professionalization of the business as you're working together, making sure you're aligning. I also think other pieces have come into play of, us trying to refine our brand, right? And making sure that we have internal quality of brand management. And then a lot of it is also just getting out marketing materials. And when I mean marketing, I mean LinkedIn, X, because not only do we want to grow the hedge fund, we want to continue to grow the survey competition. And for anyone who's interested in joining the survey competition, you can find it if you just Google survey.oraclum, you'll find the survey competition. But I think that's one of the big things that we want to grow. Because I think one of the things I've said is we have a good thing going, but we want to take the survey from the level that it's at to it is Duolingo meets Robinhood, right? So make it so that the platform is so easy to use that people want to be on the platform to not only make predictions about what we're doing now, but maybe even expand the kinds of predictions that people can make, right? And maybe we expand out and make it appealing to a broader audience. And that could be making predictions about a lot of different things and adding to the current competition that we have that's been successful, but what other ways can we add to? Are there other competitions that could make sense? And the other piece, and I think this is really neat, so many of the traders that are on our platform, we talked about my partners being political junkies, data junkies. So many of the traders on our platform, they're market junkies, they're data junkies. And what I want is to be able to provide them dashboards where they can look at their own data. How am I at predicting the S&P or the VIX or different stocks? Like, I want them to be able to test and see their own results so that they can improve, because the better our predictors are, the better our signal is going to be. But that also means the better that we make the platform for them as a customer too, the more people we're going to have that continually come back to the survey makes the survey better. But also, I think about it this way as this is I'm going to take us down a little bit of a rabbit hole, but I think it's such an interesting rabbit hole. You have Kalshi, you have poly markets, you have all these betting markets with DraftKings, and you just go down the line. I was a school teacher for a little while. I taught economics, I taught psychology, I taught a number of different courses. And one of the things students constantly were asking me about, how do you trade on markets, and learning those lessons. But the framework that we've given with some of these apps does not create the right kinds of behavior, right? It gives the wrong feedback loops and mechanisms, right? It's almost closer to gambling and the high of gambling. What we want to do is say, okay, our platform is free. Anyone can go on it. And guess what? Actually, if you're good at making predictions, we pay out prizes to people that are on the platform. So what if we made it so that people could look at and improve without gambling away their own money, but actually improve? The only way you can get better and get more money is by improving the choices and the bets and the information that you give about markets. It's not by gambling away your hard-earned money, your paycheck. And so I'd like to be able to think of this as an extension of financial literacy and do it in a way where we flip the table. We flip the script on financial literacy, that so many people, that even teachers in a school would be very comfortable sending their students, because they're not learning bad habits, they're learning good habits. And we give them a full suite of tools to make that happen. So that's kind of the vision that we have long term. And I don't think I've said that very publicly, even before now. So you're getting kind of the inside scoop of some of the things that my team and I are thinking about in terms of, yes, we want to up the ante with the fund, absolutely. But the way to also do that is to continue to raise the stakes in being a platform where people want to go, want to make predictions, but do so in a way that reinforces good, healthy habits of financial literacy. And the whole idea is, as both rise, as the fund gets bigger and as we get better returns, we're able to have the survey be better and be more useful to the people that are on it.
That is awesome. I mean, obviously, financial literacy is a pretty healthy problem here in, I wouldn't even say in the U.S., probably in the entire planet. So that's a big one to tackle, and a super important one. And also, I think for those that are launching a fund, I mean, just like what you're saying, right? And we do, some similar things of like, I don't know. It seems like a new fund now is not just a fund. You now have a bit of a platform to work from, right? I have a fund, I manage money, I have something that I can offer and kind of give back with. You guys going through your platform and your financial tools and so on, which is super cool. And I think everybody that's going to launch a fund or kind of in that early stage, at the very least, get a social media presence, right? And not just to get a bunch of followers and to get a bunch of investors. That's all fine and good, but do it with the goal of, how can I add value to the world, right? What information can I give that's going to help somebody do whatever it is they're doing a little bit better? And so I think that really needs to kind of go hand in hand. If you launch a fund and it's really hard to do, it's a process, and it gets you to a place. But when you get there, share, give back, help the community around you through whatever that additional vehicle is. But plan on having something. I have this podcast for two real reasons, because I love to learn from everybody that I have on here. I come out with just so much great information every episode. I'm like, good freaking grief. But then on top of it, I want to share with the world what people are doing, because I think it's important to share that information and not sit on it and keep it private. So that's really cool. That's you guys are crushing it. And just to go back for 1 second, we'll have all of your survey details and everything posted with this episode, so that people can go to the links and your sites and participate there through the surveys and through all of that, because I think that's super interesting. It's super great. I got a lot of personal messages after the episode with Book where people were saying, I went to the site, I signed up for it, this is super cool. So we'll make sure to recirculate that again.
One thing I also want to point out, this is a story that I just love from this last quarter, right? So we're in April. So we just did payouts for our Q1, and our survey winner was somebody who had never won before, right? This past time, our top winner. And they messaged us and said, thank you so much for running this survey. I've learned a ton. I look at my own data. I'm looking to constantly improve. And they said, I've always dreamed of having a career in finance. And now I actually have something to take to a hedge fund, so that when I want to get a job, I can say, hey, this is a feather in my cap. I really have put in the work. I've done this survey for quarters and years now, and now I'm getting better and better. And I think that is the kind of story, and illustrates kind of the point of somebody who says, hey, I'm not just taking this because I want the reward and the payout. I'm doing this because I want to improve. I want to improve in understanding the world around me, because the market, so much of understanding the markets is understanding the geopolitics and listening to your neighbor and engaging with others around you. And that's kind of core to the philosophy of, if you want to get better, at understanding the world around you, if you want to get better at finances, listen and ask questions of those around you. Don't live in bubbles or echo chambers. Break out of the habits that we so often cultivate of toxic polarization that happens in our world and our society. Talk to somebody who thinks differently politically than you do, right? Find activities for which politics is beside the point. This is a very Bob Talesian point, where he's written a really interesting trilogy of books about how polarization does not make us smarter or better as a world or as a society. And I think it's true whether you're talking about politics or philosophy or culture. We want to have diversity of thought, intellectual diversity, and it does make us smarter. It makes us sharper, and it helps us to actually better perceive the world around us accurately. And I think that's the mission. Yes, it's financial literacy. I think financial literacy is important, But the other underlying truth to what we're doing is that setting aside differences and toxic polarization and embracing and listening to others is really, really critical too. So if those two planks come together, that's the thing that I hope to make the world better through what we're doing with the hedge fund.
That's awesome. That's awesome. I think that is excellent advice, and I think that's a great mission to be on for sure. Tell my listeners where they can keep up with what you're doing. Give us a couple of spots they can follow along.
So they can find us at survey.oraclum.co.uk, or they can check us out on our website at oraclumcapital.com. So feel free to follow. The other thing is Vuk Vukovic, my partner and CIO. He has a Substack newsletter. So feel free to check that out if you're interested. So those are the ways to follow. But I also want to say one other thing to that point. The point that I was illustrating about breaking through polarization, listening to others, you are living that out right now, Jared, in the podcast that you do. And I love the way that you model openness, you model curiosity and learning. And it's those kinds of traits that I know are going to make your fund successful and make it really easy for me to make introductions for you and to you, because you're exactly the kind of person who is living out the characteristics that I think are so important to succeed in this industry, and the kinds of behaviors that I think need to be modeled to be successful. So keep doing what you're doing. I think it's so important. And I mean that very sincerely.
Well, thank you, man. I appreciate it. And you guys keep doing what you're doing. And I think everybody needs to follow your journey, because it's you guys aren't just out there trying to make a bunch of money. That's great, but you're doing a lot on top of that. So it's a really cool story. It's a really cool journey you guys are on, and it's absolutely one worth following. So we'll make sure to give everyone all the information to be able to do that. And Scott, thanks for being on, my friend. This was a great discussion. As always, I think I learned the most out of anybody, and always happy to be here with interesting people doing interesting things. So thanks again for joining us.
Thank you for having me, Jared.